And I'll play some music, some soft, sweet intro music. And then we can shoot the shit. All right. We'll go ahead and go back to our discussion we were having. All right. So Lambda's working out pretty well for you, huh?
Yeah. Well, I mean, we'll see. I'm very skeptical too, but all the fear in the market makes me more greedy.
Well, let me, what is it? Is it, how you spell it again? It's not Lambda.
Landa.
Landa. Landa. Okay. Okay. So one thing I don't like is that they don't have a web application. So for instance,
Yeah, I've been pinging the CEO about that like every day.
Do we really live in a world where we're just not going to let boomers use platforms anymore? I mean, the thing is, if I'm going to sit here and do it, like I've watched, people's YouTubes talking about Lambda, and they have spreadsheets. I mean, you kind of have to keep a spreadsheet. And so when you're going to be looking at this stuff, I can't even bring anything up to show. I mean, I would want to be able to put it into some kind of a spreadsheet just like you are. But I mean, one of the things was when I looked at the app. See, where is that thing? My phone's in the room. Okay, so I can't even do it. I can't even look at them. Okay, so I was looking at properties that were in the North Atlanta metro area, and I didn't see any. And a lot of the ones I saw, I would have to say, me knowing the Atlanta real estate market were, let's just call them high risk. I mean, they're areas where, I might consider owning property, but I would have to go into it knowing that rents would be low and, credit scores would be low too. So, but maybe that's the kind of stuff that you're taking a risk on with Lambda. I don't know. But I bet it's going to get better, actually. I'm really intrigued. I think I just need to drop a little small amount of money into it and then do this kind of experiment with you. Do you have are you keeping a list of how many properties do you have?
I think last I checked, I'm in 19.
You're 19. Okay. Oh man, you like to do your Gendex, don't you? Where you have hundreds and hundreds of investments.
Yes.
Yeah. Well, I was about to say I'll follow you and just keep an eye on what you're trading and what you're invested in. That'd be one way to do it. But 19's a lot. That's a lot to keep up with.
Well, you say that, but they're actually planning on adding like 300 some odd more properties.
Well, I'm sure there are, but there has to be a best practice for selecting these properties, basically. So hopefully we can kind of figure that out. Oh, interesting. I can move that around. Okay. All right. Well, let's start getting into things. Let's start with politics first, because that's what you should always, religion and politics. This is a lot of people have requested to talk about NVIDIA, and we're going to talk about NVIDIA at the top because that's been the big news today. And then we'll look at the markets and we'll look at crypto, the general sentiment on everything. And so this big drop right here on NVIDIA comes after this right here, where Biden, or just the United States government, has they blocked sales of the H100 integrated circuits to China and Russia as a sanction, which I'm coming into this not knowing that much about NVIDIA. If anyone knows, Jen, do you know? Like, what's so? I'm sure that in the Discord we have somebody that's a NVIDIA expert, but I assume that this is a big deal. Of course, this is a bad look because Nancy and Paul Pelosi, either before or after his DUI, they got out of NVIDIA. That's a bad look. I'm not really sure if that was, entirely politically motivated or insider trading, but yeah. Welcome to the stream. If you have symbols to look at, call them out. Why is YouTube not showing? There we go. Okay. All right. Hi, Judy. Welcome. Okay. So I think when the first live stream I did back here 2 weeks ago, I looked at this. What day was that? That would have been Friday the 19th of August. Yeah, right about here. And the one thing that I noted from a TA standpoint was this. Someone asked him, we can go back and look at it and see. I'm not tooting my horn or anything because I know people have been really hurt by this, but basically NVIDIA in May broke below the 50% retracement level here. And that is my line in the sand for just about everything. If there's one thing that I trust when it comes to trading and technical analysis, is the 50% retracement level. I mean, it's the halfway point of a trend. And if something is going to continue on, at least half the people that bought it need to hold on to it and keep buying, essentially, if you want to put a narrative to it. And what ended up happening here with NVIDIA, basically the trend started in June of 2019 or May 2019, all the way up through COVID. They did really well during COVID and peaked out at the end of November 2021, just like everything else, tech and growth. And then it fell off. And that line in the sand was 190. 190 was right there. And then over the course of this recent year, and its unpleasant down move, especially in tech, it broke below it in the month of May, came back and retested that level, held it. And I believe the Pelosi's got out in, was it July, the end of July? So right about here. They're not getting out on a technical basis. They're getting out for whatever reason. But then around the time it came back up here at the beginning of August, held that 190 level again. And then 2 weeks ago on the live stream, held it again. And that's where I made my comment. Yeah, it should have gotten back above that level. It should have recaptured it if it was going to go higher. And now you're entering into what I call the valley of risk. This is where the pain becomes extremely harsh, because anything you do at this point, especially as it's breaking its most recent low in July, this is a good solid break. It closed the week, it closed the day below July low. So at this point, the highest probability thing is it's going to keep going. I say that, but then when people sell out of fear, that's when it almost always, at least psychologically, because we all want to personalize our investment decisions because they are very personalized. And so when we make an action and it doesn't work out, then we think that we've done the wrong thing, but that's because we become emotional about it. And so now that we're in this valley of risk, it's almost like anything we do is going to be wrong. And so there is no good answer. But, I keep going. I go every time I talk about something like this. I know I did when I talked about NVIDIA 2 weeks ago. I look at companies that I was in, like Zillow, where Zillow came down to its, I've got it all marked off from 2 weeks ago, where Zillow came down to its 50% level. It had a trend just like NVIDIA did from the bottom of COVID up until February of 2021. In about the middle of 2021 last year, I bought because I like Zillow as a company. And then as soon as it broke below that level, right here around May of 2021, it did the same kind of pattern where it comes up, hangs around this level, and then breaks below it. And then I got out around July because it broke that level. It broke the level, could not get back above it, the 114 level on Zillow, and then it broke the low that it had made before on this bar right here. And that's very similar to what NVIDIA is doing. If you look at this right here, let's do a side by side. If you look at this right here with NVIDIA, again, I'm always kind of careful not to compare one thing to another because every chart's going to be different. But with NVIDIA, you had this level here at the 190, and essentially there was the 114. Let me clean this up because I seem to look at this every stream, so I don't want to delete everything on here. But you have the break of the level, the retest and hold of the level, one final little push which fails and gets it back below. This one didn't even get below. And now you have it breaking this prior low right here. And then in the case of Zillow, it just kept on going. And to this day, it's just there. And when it will recover, you don't know. But, at the point where it's just eating you alive and you can't think about anything else, just stop. Just eliminate the pain and you'll feel a lot better. It sucks. Taking losses sucks, but you know what? You're going to feel a lot better. That's the only thing I can really say to that point. So,
compare it to Intel.
What's up?
Compare it to Intel.
INTC. What's Intel doing? Yeah, again, valley of risk. I call it the valley of risk because you just keep going further and further down. And imagine it's a big dark valley, and you don't know where the bottom's going to be, and you're just going to sit there worrying about it day after day, week after week, and really, the moment you sell, sure, it could come back, and you're going to sit there like, oh shucks. But you know what? You didn't know. All you knew at the time was that this position was far beyond what you could tolerate, and you need to sleep at night so that you can be fresh to make better decisions. That being said, there's other opportunities out there. I'm sure there's always an opportunity. And if you're focused on something that's giving you such a negative vibe, you're going to miss a lot of those opportunities. And so sometimes just cutting the loss and then taking a little short break and then coming back and looking for new opportunities, that's the way to go. That's the way to go. All right. Well, if you're just joining, we've been riffing about NVIDIA for a while. Thanks for joining. If you have anything to look at, post it in the comments. Thank you to people that are on YouTube, TradingView, and we'll get to your comments in just a second after I start doing this weekly recap. Again, I'm doing this video today because tomorrow I'm going to the beach, and I hope everyone has a good vacation. I haven't been to the ocean yet this year, and the summer's almost over, so I got to go. So, but yeah, that being said, I don't have anywhere to be today, so we can go a little long. There's a lot of stuff this week to talk about, and so we didn't talk about last week. But if you got something you want to look at, we'll look at it. All right, let's look at the stock market first, and then we're going to look at crypto, and that's of course going to include Bitcoin. And yeah, let's see here. So S&P 500. Well, let's back up a little bit. So Nasdaq, everyone's starting to get a little nervous. I think it's I saw this. Somebody posted this from the Michael Burry archive today. I don't know what the date is on this, 3988. So yeah, it's close to where we are today. Cassandra BC is Michael Berry. He comes and goes from Twitter, but he came in and said, what was it the other day, that he'd sold everything. And of course, people listen to him because I like him. He's a very respectable contrarian. He's also a little bit of a troll, so I naturally like him too. Do we follow him? Do we believe that there is a crash continuing? Well, I mean, I made a post about this where he was sort of trying to imply this, a couple of weeks ago. And a lot of people are going to say, oh, it's interest rate fears. Oh, it's, recession, blah, 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 blah. But I mean, that begs the question, if everyone, that narrative hasn't changed all year, what changed on August the 16th? Really, what changed on August the 16th? I mean, all I know happened on August the 16th was I got this little indication right here where we had a false breakout happening after a good long run. I mean, this is when something goes on this long, from June all the way up until August, basically almost almost 2 months worth of a rally, and the conditions have not changed, you want to start getting skeptical of it. And so when I saw this happen, I didn't care what news was happening. I didn't care what interest rate changes were going to happen. I saw a technical setup with a good risk adjusted reward. And Jen asked me, are you going to take this? My answer was, I have to. And that ended up being a great opportunity to hedge or, take a short in futures, as I did. And I thought, like always, I thought that, I was just going to get a short run. So I got out somewhere around right here at about 12,900. And well, I'm one of those traders that takes profit way too early. So it is what it is. But yeah, the stock market takes the stairs on the way up, and it takes the elevator down. So where are we today? Now, last week I marked off this halfway point here because we need to measure this current rally that we've seen. And day by day, we've actually closed below the 50% on the NASDAQ. Now, the ES was a little bit more bullish. Let's do the line here. Let's see where we stand here. It also closed below it. So I got to take that as bearish. So while I was looking this week, I didn't take any futures trade this week. I didn't see anything that particularly stuck out to me. It was actually a rather boring week that I was just picky, and I did not see anything. There was an opportunity here, I believe, the 31st of August. When was this? This was in the morning. Looks like there was a breakout here, but yeah, it didn't quite trigger the indicator I would look for. I've been working on that indicator, by the way, to get those breakouts set up. But yeah, we'll see. We'll see. I'm more. I mean, you got to be neutral here. I'm not bearish yet. On a strict basis where I look at Ichimoku, we are not yet fully on the bearish side of the cloud, either on the ES nor the NASDAQ, the SP 500 or NASDAQ. We've really just come back into a wonky, undefined pullback. And so next week, when I get back from the vacation, I'm going to be looking for technical setups. I'm going to be a little more leaning towards the long side, but I'm just going to be neutral. A couple of things that people brought up to me about how on social media, people are thinking that September is going to be bad because historically, September is the worst month for performance. I didn't have a chance to dig into this. There's a couple of things interesting about this September, because this is in a midterm election year, and the Dow has fallen 11 out of the last 18 pre-midterm Septembers going back to 1950. So 9 out of 18 will be 50%. So what's that, about 55, 60%, something like that, if I did the math. It's higher than half. So the probability is slightly to the side that we're going to have a bearish September. But while these statistics are things that I try to really focus on, they are just that. They are just statistics, and you can't go in automatically assuming that. But if we do start to, over the course of the month, start getting into this area right here, if we start in the NASDAQ getting down into below 12,000, if we start getting below 3,900 into the 3,800 on the S&P 500, that means we're starting to retest this low, and that's going to be interesting. So there's a lot of money to be made on the rejection of the current narrative, and that this was just a pullback. And there is a little bit to be made back towards the bottom. But by and large, most of the time over the course of history, things have been okay. So I'm going to reject some of the fearful narratives as just a base default. That's just the way I'm going to be, especially when people are saying it on social media. Everyone thinks it's bearish. Everyone I talk to thinks there's going to be a crash, and I'm just okay. If everyone thinks that, then why aren't people running around panicking, firing everybody, basically creating the recession they're talking about? I don't know. All right, let's. I know popular demand. Let's look at crypto now. Okay, so as a follow-up from last week, not much has really changed. Last week we were looking at Bitcoin, and we were right here. We were in this little price action here last week. We're the same place. We're still below the cloud. We're still bearish, and momentum is still out. This is going down to try to retest the lows. And by retest, I don't mean it necessarily is going to hit it. And I don't mean it's necessarily going to stop there. But the highest probability is this thing is going to go lower until it try to find some bottoms at these lows that we made back in June. I mean, that's what it is trying to do. It's trying to get down here and retest it. And you could know that that was going to happen because on this pullback, it never got back above the daily Ichimoku cloud. It never got the trend bullish in the way that I like to analyze it. And I've done lots of videos about Bitcoin in particular on the daily Ichimoku chart using the classic settings, how actually effective it is. In fact, even more than a buy and hold strategy over the course of the last decade. So while it's like any technical indicator, it's not right 100% of the time, it does give an optimal advantage when analyzing it. And right now, you should not be buying it. I would be okay with people buying Bitcoin if it had poked its head above the cloud here. At the same time, the momentum, that would have been a good sign for us to continue upward. We would have even had a good amount of profit target between 28,000 and 33,000, but that did not happen. I was more than willing to come on here and say that's a good trade. With Ethereum, you did have it get back above the cloud, but the problem was in this recent move down, the retracement level, which also matched up with the low, was at about 2,200. And so if you would have taken it when it triggered to here, that little bit of movement right there, that's just not enough to justify a long based on the risk. And now Ethereum is coming back into more of a neutral standpoint. So again, don't see that as a buy. Monero, which is something I've been very bullish about, it is also in a neutral situation. But here is the most important thing in crypto right now. And I've been talking about this every video, and I'm going to keep talking about this while this is the case. On the left side here, we have Monero versus Bitcoin, and on the right side, we have Ethereum versus Bitcoin. This is their relative performance to Bitcoin and Ethereum over the course of the year. Monero has outperformed Bitcoin by 44%. Your money, your wealth, your cash, or whatever you want to call it, your value has been preserved better in Monero, a privacy central old cryptocurrency. I know it's funny. I was having some conversation this week with friends, and they're all trying to get me to look at this new cryptocurrency that's going to solve some problem. It's going to be the best thing since ever, and blah blah blah. This is a lockup period. Blah blah blah. I am such a boomer when it comes to crypto now. You can't get me interested in these new projects. I'm sorry. I don't want to buy your lottery ticket. I don't care. I've been doing this for a decade. I know that you think, like, every time people come to me with this thing, they're so optimistic and they're so energetic because that's what they're buying. They're buying this narrative. But there's only 3 cryptocurrencies that I care about: Bitcoin, Ethereum, and Monero. And right now, the winner of those 3 is Monero. And I keep on telling it to people. I keep trying to point out to people the advantage, both in terms of use case and in performance. And people just keep doubting me. And I think that's great. It means I'm still on the contrarian side of things. And so doubt me all you want. As I point this out, I don't care. I don't care. I like it for the use case, and I like it for its performance relative to the rest of the cryptocurrency sector. Look at it yourself. Make your own judgment. But before you go buy something with 5 or 6 zeros behind the decimal place, because YOLO, because Lambo, right? And before you start buying into this whole narrative that the Lightning Network is going to assuredly make Bitcoin the world reserve currency or some other religious dogma, look at what's happening in the market right now. So that's my message there. All right, look, I think some people had some comments about crypto on the chat. So most important thing in crypto right now is LUNC. What's LUNC? All right, let's read some comments here. So let's open the 3-day Bitcoin USD. Oh, hey, Aver Kirska. I think we had a discussion the other day, didn't we? On one of your posts you tagged me in. Let's take a look. I don't use the 3-day chart. Usually I'll typically use the week. Yeah, I'm sorry. I mean, if that's what you're comfortable using with a 3-day, but I'll use either the daily or the weekly. I try not to use too many different charts, because ultimately, if I look at the 3-day with Ichimoku, it tells me the same thing. We're in a bear trend. The daily, on the other hand, has, like, this is the 3-day we're looking at right here, and I can sort of see where it got out of the cloud. Let's see. So, like, let's just take a look. So a 3-day chart on Bitcoin back in May of 2020 was roughly when it would have had you go long. Okay. Whereas, and when would it have you got out? It would have had you got out here. It would have had you got out basically in July. Okay. So from here to here would be the 3-day analysis. Just going on how I would look at it, just time frame to time frame. And then if we did the daily Bitcoin trend would have had you get in here. Wait, no, here. Sorry. Roughly about the same time, because it's clearing, so no difference there. And then it didn't quite get you out there. Well, let's just say that it did. It got you out here, but then it got you back in here. Right around when it got out of the cloud here. And then it got you out earlier here. So one's just going to be a little more delayed than the other. You had a little false thing right here, but you really only gave up about that much from this big trend. And it got you in and got you out. You were able to capture about this much, whereas the trend from the 3-day got you out much later right here. It really doesn't matter to me that much as long as you're consistent, but it's just the 3 days is not really something that fits into my trading, honestly. All right, let's take a look. Crypto, and this is from Dr. Chelsea. Okay, so I'll start over. So Let's see. What do you think is going to play out with crypto in the next 24 hours? Frankly, I don't care because I don't trade crypto on the weekends because I think that the stock market closing is actually a feature and not a bug. I think that the fact that crypto is open 24 hours a day, 7 days a week is actually bad for your health. And maybe I'm wrong. Maybe you're a fantastic 3, 4 a.m. at night trader looking at a 1 minute chart. I just did my time doing that, and from personal experience, that does not work for me. Nor do I think it works for everyone, but I could be wrong. If I'm wrong and you make a ton of money between the hours of 3 and 5 a.m. looking at a 1 minute chart, I'd like to see your results because you are amazing. But yeah, I think really you can get enough done in crypto just looking at through the week, and take the weekends off. But for the next 24 hours, if it's anything like for the last couple of weeks, it's going to be pretty boring. I mean, that's another reason why I'm not really particularly interested, because these are daily charts right here. I mean, look at these daily bars. I mean, we look at the average true range. That's basically a measurement of the distance of the bars averaged over the last, in this case, 14. You can't really see that number there. What we can do is we can change that. So basically, let's look at, I don't know, 26 days. So close to a single lunar cycle. Yeah. So basically, over the course of time, the average true range, in other words, the distance that price travels on a daily basis, is declining, declining, declining. Now, what's interesting about that is periods of decline in ATR oftentimes eventually lead into periods of expanding volatility, but you don't know when. But if you were to assume that the recent past is going to be like the near future, then I would just expect these bars to keep getting smaller. And so over the next 24 hours, what do I expect Bitcoin to do? Nothing. Just looking at those metrics. If we were in a trend, if we were in a big sustained movement, especially a bear trend, then I would say, okay, I expect it to move. But it's really teetering on the edge. The risk is in the short side. There's still lingering fear. There's still lingering trepidation. Nobody's buying except hardcore people that say they're buying, but I don't know if I believe them or not. I know people are holding. There's a lot of hardcore people that are holding for dear life, hodling. But there's nobody really making any money teaching classes on how to get rich on crypto this time of the year, like there was in the end of the year last year. So you don't have that massive inflow of, I don't care what the price is, just get me in going on. We're not in the last year. And I think a lot of some people have been slow to realize that. But I will tell you when I think that things are going to turn around, I promise, but I don't think it's going to be anytime soon. I don't. I think people need to get more bored and frustrated, honestly. I know. Okay. So I've got 4 market makers short on Ethereum at 1530. Who's a market maker? Are these like whales and stuff? I know that a lot of people are looking at hold on, Ethereum merge clock. There is a countdown. I think it's September 13th. When merge. Yeah, I think that we're 12 days out. So yeah, it's estimated to be on the 13th that Ethereum is going to go from proof of work to proof of stake, which is possibly one of the reasons that Nvidia is going down, because the market's going to be flooded with a bunch of old used GPUs. So if you've been looking to build a gaming computer, which I actually have been for a while, it's going to be soon the time to do it, because it's no longer going to be profitable to run incredibly computing intensive hardware to mine Ethereum. And the prices of things are down, so nobody wants to spend the electricity on it. So I mean, that's in addition to the sanctions. That's probably another reason that Nvidia has been going down too, because what drove Nvidia up so much was that people were buying their graphics cards. I mean, you couldn't get graphics cards for a while. I mean, you had people were creating bots on, I don't know if they were doing on Amazon, but creating bots on some of these suppliers' websites to buy up all the graphics cards as soon as they came available before real customers could, and then reselling them at a premium on a secondary market. There was so much demand for them, and it was driven by the incentive to mine, and that's not here anymore. So that's not good for NVIDIA's business. But there's a lot of speculation on if this is good or bad. People think it's going to make Ethereum less secure. I don't know. I'm not smart enough to really know. That's for people that are really, really autistically aware of what's going on in the blockchain space. What I know is the adage, buy the rumor, sell the news. And a lot of people have been attributing this recent run up to that merge, but the people that would do that are only people that don't follow the fact that this Ethereum chart looks just like the NASDAQ chart, looks just like the S&P chart, looks just like the Bitcoin chart. I mean, everything's pretty much correlated right now. You have a bottom in June, a rally until mid-August, and then now we're having a pullback across the board. Everything risk related is doing that same thing. So it's almost, if you just look at it from a technical analysis perspective, you just look at the price, I don't really see any real change, any real fundamental driver. There's no alpha. There's everything is correlated basically. So doesn't matter almost if you have your money in Tesla, Ethereum. I think Apple's probably gonna be a little different. Yeah, still up and then pull back. Nice little pullback here on Apple. I think we talked about this. This is a kind of dubious pullback level because what I'd like to see it do would come back to 152. But all right, let me not just get distracted. So, that's coming up on September the 12th. So that's going to be next week. I expect there to be a little bit of stuff happening. This would be like one of the few instances where around this merge, I'll keep a good eye on like the 5-minute chart to see if there's like some kind of trading opportunity in there outside of normal market hours. But I'm not seeing much movement going into it. There's not much hype. I think it could be very well everyone's sitting around waiting for something to happen and nothing happens. So we'll see. But I will keep an eye on it just like I would like a Fed announcement, like J Powell speaking, because it is a potential catalyst. So you probably do want to keep an eye on it for sure. Let's see. 4 market makers short at 1530. So what do I think about being short Ethereum? I think if you look on the swing trading timeframes, it does lend itself, going back from the middle of August, it had a little pullback here on August 25th, did not get out. Now it's kind of pulling back and holding here around the 15. I would say if you can get it back up into the 1650s over the weekend, then you probably want to close that short. But as it stands right now, it's basically just holding resistances as it goes down. So let's take a look here. Highstone Pilot still bearish on silver. So yes, I mean when I did the silver, let's clean this up a little bit. I think I talked about this 2 weeks ago when somebody asked me. Silver, let's get my idea. Where is it? Silver breaking support. So this was silver. I was using SLV here. It was breaking down below this SLV, which is the ETF level. I mean, I took some. What did I take? I go and look at it. But I took some options out to. I talk about the short squeeze BS. Okay, I did this with SLV options basically, and I took them out to. I have to. I got a different. Sorry, I took them out a while. I think this implies that I took them out till January. Yeah. So I took them out to January basically. So my horizon for silver to get down to 15 is between now and January. So to the end of the year. And so given that, let's just bring that back up, the SLV, and we'll play that out. I know I got this big arrow here, but yeah, I mean, it's so far we had that pullback, but really and truly that just retested that 19 level and held. And now it looks like it's probably going to come down. It's retesting these lows. Actually, it looks like this week it broke the low that it set in July. And highest probability is it's going to continue lower. I mean, really, I trade the long-term time frames just like I trade anything short-term. I'm going to look for that trend. In this case, the one that started back in COVID, topped out in February 2021, where they tricked everybody into thinking there's going to be a silver short squeeze. You came down to this level, you held it, you broke it, you pulled back to it, you held it here, and now you're continuing forward into that valley of risk that I talk about if you are long, and now you're in a very uncomfortable position. But in the case where I'm short, yeah, let's just let it keep going down to 15 right here, basically this little inflection point right there. So yeah, still bearish on silver down to that point, and it's going to take a few weeks to play out. I know a lot of people really believe in silver, but I'm just telling you what I see. I got to trade what I see on the charts. What is the possible price of Ethereum in the next hour? What's the price of tea in China? I don't know what is going to happen in the next hour, but as I said, it's holding a bearish trend down. I mean, this is a 1 hour chart right here. It looks like, I don't know, a heart rate monitor or something. I mean, this is not something I want to trade. It's not really giving me any kind of setup. It's not at a level. I mean, it is at a level. It's at this level right here. See, if you ask me, Norok, like, what are you going to do with Ethereum right now? I would tell you, I'm going to wait for a setup. And in this live stream, in fact, I made a comment on the Discord, which, by the way, let me plug this to people. I run a Discord. I don't charge people anything for it. I just share my ideas in real time, my trades in real time, and other people that are really smart traders do as well. I wanted to create an open space for people to discuss ideas. That is what my Discord is. I don't charge for it like some people do. Just come hang out and talk with us. That's all I ask. Just participate. And in the future, if you participate a lot and you're more smart money, you might get a free class. We'll see. Somebody can motivate me to do that. Anyway, I pointed this out on the Discord because I clipped, or I put a timestamp on last week's Ethereum discussion in the live stream. Because you see this right here. This was Friday of last week. I think we had some kind of a, what did we have? Was it a jobs report or a Fed thing? I don't remember. But you had Ethereum. This is the 1 hour. Okay, if you're talking about the 1 hour, and you asked me last Friday, what's the possible price in the 1 hour? I would have said, I'm waiting for a setup. Okay, what you got was you had price come below the 1 hour cloud of Ichimoku, and then it shot back up to here. And that triggered, this little indicator right here, which I call spike alert. Ask me about it if you want it. It's free. I give it to people. And it triggered this little price action right here, where price swings down and then comes right back up. But the key thing is it creates this bottom right here where everyone thought it was going to go down. Everyone jumped into it, and now they're all panicking because it's going up and they're having to get stopped out. But if it actually breaks this low, in other words, if it triggers this little green arrow, or excuse me, green cross right here, that means that is a true breakout short, because you've already gotten people emotional in this volatility right here. Now, if it breaks that low, people were really selling it off. And so that I talked about in the live stream. Let's see, I think we were at this time, and I was saying like, okay, yeah, this is a triggered breakout. Okay, even though it's coming down to low right here, this on the 1 hour is a setup. If you asked me what's going to happen in the 1 hour last Friday at this time with this situation, then I would have gone for it. I'm very, very picky about when I take trades. I don't walk in my office here and sit down and say, I'm going to buy this or I'm going to sell this. That's a good way to lose money. And if you haven't figured that out yet, you will. I look for specific setups, and this is one of them. And that sets up a high probability breakout, which worked out pretty well because you had that emotion last Friday morning around 11 o'clock. And then by the end of the day, they sold that thing off, broke those people that were really emotional in the morning. And over the weekend, you got this trend, good money there to be made. And now, as it comes back, you need to take some profit and then just wait. Wait for the next setup to happen. If you don't see it this hour, practice the art of doing nothing. Be lazy. Go on vacation. Have a Coke. Smoke a cigarette if you want to ruin your lungs, barbecue them. Just do something other than trying to find out what can I do right now. If you want to do something right now, you can go buy a lottery ticket because that's what you're doing if you sit down and you take a trade based on your feelings. If you want to do that, if you want to gamble, that's fine. That's up to you. That's not my business. But that's not the business that I'm in. So, all right. Guivino asks, do you think it's relevant, the 50% retracement on the SPX 500 4-hour chart? All right, well, let's take a look at that again. I use the futures. Not sure if you're talking about the SPY. Let's do SPX. That's what you're talking about. SPX. All right, let's see here. So I don't know which one you're talking about. Is it this one on the way down? Or is it this one on the way up? I think at the beginning, you may have missed the first part where I looked at the stock market. We did break below this 50% level today across the board. And so we had this week way up. Oh, you mean like all the way back to here? Or are you talking about like, okay. Yeah, I mean, it held the 50% of the way down. I mean, it broke above it. It's kind of wonky, okay? It's an inexact science because you could have easily come in here in August if you were so bullish and you would have said, it broke above this 50%. Let's go. This is where kind of like your intuitive discretion has to come in because when you have a big bear market rally and it pulls back, and even if it breaks it, you got to kind of take this as like, okay, yeah, it's at the 50%, but is this really the most, is this going to be the best risk reward setup for it to break here? Okay. Or after having 2 months of bullishness, do I really want to jump in long? That's what you got to ask yourself in that kind of situation. Because what would have happened in the case of, if this had been assigned to go up, let's just talk about it this way. It should have come back and retested this level. Like it's just like in the inverse of Zillow and Intel and Nvidia, which we talked about. It should have broken the level, pulled back, and then gone. And then if you wanted that confirmation, you could have maybe grabbed it somewhere in this little rise up. But what ended up happening was it came down to this level. And at that point, you're thinking like, okay, let's see what's going to happen here. Let's see what's going to happen. And you got a pretty solid bearish move here. Now you've broken down below that level. And so this was not a very good test to confirm that it had gotten above that level and then pull back to hold it to go up. And so now what we got to look at is this trend that brought us up. And as of this week, it did in fact break it. Now, what I'll be watching again, just as a general rule for this way of analyzing things, is for it to come down, and then let's see next week probably, or wait, this week is not over yet. I'm thinking the week's over because I'm going to the beach tomorrow. Okay, so the week's not over. My bad. I'll be watching the market tomorrow morning. I just didn't have time to do this live stream tomorrow. I'm in Friday mode right now. Okay, tomorrow we need to watch and see. It looks like here in the after hours, the market's starting to tick up a little bit. So we need to see the market, all the things, pull back to this 50% retracement level. Set alerts here. Let's see exactly where it is. So this is the SPX. If that's what you're going to watch as your indicator, that's fine. That's 39.81. The ES, which is my preferred way to analyze, is I'm going to look at the level 39.83. So it's basically the same number. So let's see what happens. It looks like we had a big rally here and in the afternoon. This is almost a little bit of a fake out right here. If you think about it, because they spiked it down, they made you think it was going to break out. This is not a breakout I would take because it wasn't coming outside the cloud, by the way. This is kind of like a little fake out right here. It's going to be interesting to see. The 30-minute here on the S&P 500 over the last week or so has really sort of contained the trend. So I know you mentioned the SPX, but I like the ES, the S&P 500 futures, because they're open 24 hours. They include that European session. I don't have to add in the after-hours session. So this is just what I like to look. But if you look, it's sort of held that Ichimoku cloud enough for it to define the trend. So it's going to be interesting to see overnight tonight if we can get back on the other side of the cloud here and see. And that's also at that level we have said is significant to this rally holding or not. Because we can play around below it, but we really need to see Friday. We really need to see at the end of this week, the close tomorrow, before we go into the long weekend, where price ends up. And that's going to tell us something here. So basically, look at this weekly bar. This currently red bar, this August 29th weekly bar, which started August 29th, Monday. We need to see if it's going to close around 39.81, 39.83. We can even call it 4,000 if we want to round up, but that's key. That's key. That's key. It's very neutral. It's very dicey. But within that can be potentially good opportunity, as a matter of fact. So, okay. Yep. Let's wait and see what happens tomorrow. Let me go through my notes. Like I said, I'm going to go a little bit long today. Okay, so let me just do a lightning round here. I've talked about Monero, talked about NVIDIA and Pelosi. So the two trades that I am in as of this week are Bristol Myers Squibb. This was a trade from the 30th, which was 2 days ago, Tuesday. It created a spike. Did I post about this? Okay, I did not. I know I posted in the Discord. Sometimes I'm not as good about posting on TradingView. Hey, that's your incentive to come join us there. But this, and I know I talked about in the analysis on, did I not put this up? Because this is a really good one. I did the JP Morgan. That didn't do me too well. See, that's the problem. I like to post. I need to be consistent about posting everything, because then when these things really work out, I get to miss these textbook setups. But this is actually going to be, let me take this off, visibility. Let's take this off the week and the day. Okay. This is actually going to be a potentially textbook setup, because you have this from November 21. It's interesting where the tech stocks all topped out at November of 21. Pharmaceuticals bottomed. It says BMY. What's another pharmaceutical company? It's not Johnson & Johnson, because they're kind of thinking, who's another is it mRNA? Okay, that's not a good example. All right, let's just see what BMI. So they bottomed out, and so at the bottom here of November, all the way back up to the top here in June, it pulled back to 66.91. Ping, it went. Pinged it. And on that day that it pinged it, it set up this spike. Boom, boom, on the 30-minute. Love these things. Love to watch for them. And as it stands now today, after a little bit of hanging out, it's finally started to rise off that level. So that's the trade from this week, BMY. And this is one because if you look at the weekly here, I like this because this could carry on to the end of the year. It may or may not work. I'm basically, throwing bait out into the market to see if I catch a good setup. A little bit of risk, a little bit of bait to see if we're going to catch anything rallying up with a very small amount of risk. If it stops out, it stops out. But if it works well. So BMY was one from earlier this week. ATVI was one that I threw some bait at. And for instance, it did a little bit of tomfoolery here, and I got out. I got a notification that I got stopped out here. But that's okay. This was a small swing trade entry. I still don't think much has changed for the merger arbitrage. There's nothing that has really changed the fact that Microsoft is supposed to buy them out for $95 a share in cash around June of 2023. Trading at a 20% premium, which is not crazy. It's really not crazy if you think about it. We're still 16 months away from it. No, less. We're about 9 months away. So 9 months, 20% return. I guess there's a little bit of risk there. So I'm pretty surprised that more people don't take advantage of this. Warren Buffett's definitely in it. He owns 99.5% of Activision Blizzard. So he is definitely playing the merger arbitrage. So not that I'm following him, I'm doing my own analysis. Worst case scenario, I end up with a video game company, which I kind of like. I have my opinions about them. But one of the opinions is they try to make too much money off their games. And if I'm an investor, that's probably what I want. Even if they are making their games that I have loved for all my childhood and adult life start to suck. Sad face. All right. So the other one, which was today, was UPS. And I did make a post about this. Basically, okay. Not so much in recent years, but back in 2020, 2021, when people were first coming into the stock market, and they were for more or less gamblers, let's call them. I was always very perplexed that people would come in the day before earnings and buy some 1 day to expiration call, betting that it was going to be good because reasons they came up with in their head. And knowing what I know about options, how if you're buying options the day before earnings, you're buying them at the highest price you can because of volatility. I was just like, why are you doing this? It is statistically impossible for you to make money because IV crush is a consistent phenomenon that maybe you win this one, but if you take every single one, if you do it as a strategy, it doesn't make money. But then again, I am looking at this trading as a business where you need to have a consistency to it. They were looking at it as, I like said company. I buy one ticket, say it go up. Okay. If that's what you want to do with your money, that's fine. But that is not how you're going to make money playing earnings. How you play earnings is you look for opportunity before earnings. And by before earnings, I mean 3 to 4 weeks before, or after earnings, as in, about a month, 3 to 4 weeks after. And what you had here in July was earnings on UPS. And then you had this rally. Now, you don't know it's going to rally, but once you see the rally happen all the way back up to 210, now you have an opportunity for it to come back to a retracement level from this big earnings rally. And it just so happened that there was a spike, my signal, that happens this morning at that level. So I had to go for it. And we'll see how this plays out. But hopefully it turns out to be a very good textbook example of a post-earnings play. The best part about this is, hold on, let me bring it up here. Let's bring up something about it here. I wish that TradingView would implement implied volatility to their platform, but unfortunately, they do not. So I have to use Thinkorswim, and right down here, this is the indicator that I kind of hacked together myself. Shows you why you don't make money buying options before earnings. This right here is a chart of implied volatility. Now, if you'll notice something, here is earnings on January the 1st. This chart down here, oh wait, you can't see because of my face. Hang on, let's move it over. Okay. All right. There we go. Okay. So this, I should have this on the right side. Okay. For me, it's over here. So right here is the earnings. Right before earnings right here, you see this implied volatility since 12/22, December 22nd to January 28th, a month, 3 to 4 weeks, that implied volatility is rising. All option prices, both calls and puts, are becoming more and more overvalued. That's why if you take an option, bullish or bearish, at this point, even if it's going against you, you're making money on the implied volatility. And that's why when people buy an option, even if if they bought a call here with it going up this much, yes, they made money. But now you go forward to April of this year. Now IV is at the highest level it's been in over a year. And so if you bought a call or a put here and it only moved about this much, you lost money. I think it went down a little bit on earnings, but you lost money because look how quickly volatility went down. Tanked. Volatility tanked. That's why you can't make money buying options right before. But, let's say that you wait. You don't buy it here. Earnings happens, boom. Notice where you are with volatility here. If you wanted to express this trade with a call option, now a month after earnings, you are buying options cheaper. So you're able to express this trade. And the good part is, if you take that option into the next cycle, for instance, if we were to take this, let's see what the next, so September wouldn't really get us there. The next earnings cycle looks like the Q4 earnings cycle is typically in October. Yeah. So we would need to go out to, we have to look up when it looks like it's October 26th. That's after the options expiration. So if we took the December option, if we took a December call, that would let us encapsulate the next earnings announcement, and we could get possibly this implied volatility push in our option, in addition to the trade itself moving the stock price, the delta. So that's how you play around options. And when you have a market condition like this, where the market's just slowly going down and you're looking for opportunities, you have to find them in individual stocks. And the way you do that is playing off that earnings cycle, because the earnings are what's going to move the individual stocks. And that's what's going to create those trends for you to actually make money. But you won't make any money doing it the day before. You just won't. Over the long run. Sure, you're going to win a lottery ticket here. Once all the people that bought calls here are going to come back and say, but I made money, on UPS on that. Yeah, okay, do it again. Do it again. I'll wait. Keep doing that. Keep it up. Keep it up. All right. ABCL, Stone Pilot says. ABCDL, Biologics. Okay. Biotech. Fun. Biotech, one of those fun stock market things that comes about every once in a while. Do they have some kind of a pending trial? I don't know much about biotechs, my friend. I chart things out, and for me, it does look kind of bullish. I mean, this thing is going up on the daily. $10. It's in that investment grade range. It's definitely come down from its IPO. Okay, maybe. Good luck. Good luck. Good luck. I don't like. A solid meh. It's a solid meh. It's a solid meh. Let's see here. MicroStrategy. Let's talk about MicroStrategy. And by the way, we're going to start wrapping things up. So if you got something you want to talk about, post it in. I'm going to stay here and answer everything before we go. I know I've rambled about my stuff and talked about your stuff. Thanks for joining us, by the way. MicroStrategy is something I've been having that's Microsoft. This is something I've been having a friendly debate with. Let me take away incriminating evidence there. This is me just talking to some people. Round about March, some of my friends got in. Acquaintance of mine posted, or excuse me, they had a talk here locally in Atlanta that I missed because I just didn't know about it. And they talked about how MicroStrategy was a great investment vehicle for Bitcoin because it's basically a company that owns a lot of Bitcoin. Put it in your IRA, they say, because that's a good idea because it's Bitcoin. And they're speaking to an audience of Bitcoin maximalists. In other words, people that think that Bitcoin is going to be the only money in the future. Praise be to the one true currency. It is a leveraged bet financed by unsecured debt in an interest rate rising environment. Scary, but nevertheless, they were bragging in the chat that I'm in, poking at me for doubting it. Don't you wish you were in it? No. Round about August the 1st. And here's the thing. Again, this goes back to what we were saying. They thought that they were super smart to buy it here, hold it through this drawdown, and then make about an 80% return. Again, looks the same thing as the NASDAQ. It's another risk growth stock, highly interest rate sensitive. And I said to them then, hey, looks like a good time to take profit. They did not. A lot of them did. Well, some claim to have. But it's starting to come back to their break-even point. And I'm kind of staying mum about it right now, but I don't like to see my friends lose money. That's a big thing. I'm not always good at telling people what to put their money in to make money, but I'm pretty good at keeping people from losing money when I see something really happen. Because typically people stay into these things because they've got in their head some BS reason, and I'm completely objective from it. Well, that's not true. I don't like Michael Saylor. I think that he was a horrible, horrible person for telling people to sell or mortgage their businesses and homes to buy Bitcoin when it was at 60K. I think he deserves to fail financially for telling people in good conscience to buy his bags. That's bad. That's bad. But, poetic justice should be that this company goes bankrupt. I tried to short it, but I learned that I cannot. You have to do some special account to do that. It's hard to borrow stock, basically. There's a lot of short interest, so some people are shorting it. But the thing that was in the discussion one here on August the 4th was how, look at all this short interest in here. People are going to get really panicky when it starts going up. Ha, 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 because we're making so much money. There's this ego seeping in, and I'm really finely tuned when I'm reading a chat and seeing people, pat each other on the back and get in a circle and start to put their hands over to a side and, do the thing you do in a circle. And I was a bit of a jerk about it, telling people that they were getting a little too elated. And so, yeah, now they're coming back to about break even, and I'm gonna try to strongly suggest, because again, we go back to that thing about the valley of risk. When something starts going against you, how many times have you sat there and wished to get back to break even? It's so funny whenever a price goes up and it reaches this high point and it starts coming off, and now it's going down a lot. You're like, okay, well, if I can just get back to that high, I'll get out. Well, why didn't you get out in the first place? I'll tell you why. Because you're human, and that's not what humans do. Same thing happens when it comes back down to your break-even point, and it goes down, 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 down. And now you're like, I just want to get out at break even. I just don't want to accept this loss. Why didn't you take it when you had the opportunity? I'll tell you why. Because you're human. And that's not what we do, typically. But again, I always say, if you go on that strategy where you take your winners as break even and you let your losses go to like 30, 40, 50, 60, 80%, it's not a winning strategy. But I digress. Not doing well. Again, it gave up its 50% of the rally late last week. And yeah, that with Bitcoin not able to recapture its trend either. I mean, they're correlated. It's just that any movement in Bitcoin is going to be that much more exacerbated in MicroStrategy. I know people that are really big into Bitcoin have a lot of Bitcoin. That's fine. Own physical Bitcoin. Remember, not your keys, not your coins, but looking for all these ways to leverage up your returns, looking for all these ways to diversify into the stock market by buying MicroStrategy and buying Coinbase. I don't have time to get started on Coinbase today, but I mean, as I like to say, is kind of tongue in cheek. Coinbase is trading at $65.53 now. Coinbase, in my analysis, is overvalued by about $65.53. So that is my analysis of that. All right. I did not get to talk about sector rotation. I need to make a video because that, for some reason, is one of my most popular videos. People really like that. There was this tweet by Graham Stephen, looking at the housing market. Let's see. Do we have any more comments here before we? Okay, so we'll talk about housing as the last thing. If you got any more comments, just let me know. On your point here about the indicators, Jen, that implied volatility is not options-based implied volatility. That data does not go into TradingView. That's what we're talking about. Now, they can do implied volatility based on a calculation of historical volatility. I mean, that's math, where they just take the past movements and they do a square root of it. Well, it's a different formula, but it's square roots in there, I know. And then they call that implied volatility, and it will look about the same for like the VIX to the SPY, but they're not the same, because historical volatility is a calculation of what has come before. Implied volatility is the pricing of the options, which they'll move similar because they're based on volatility, but implied volatility is that overpricing that comes from options, where people's fear and greed comes in, and that's not data that's on TradingView, unfortunately, and that's what I have to use Thinkorswim to come up with. Okay. So we were talking about Lambda earlier, and how Lambda, which I can't show you on here because it's an app-only thing because Zoomers, housing has interestingly been softening. I don't know if you guys are following the housing market. I do. I have friends and family that are still looking to buy a house, so I kind of keep an eye on it for them and also for my own usage. I'm not buying anything now. I bought my last property earlier this year. It's for me. So I'm doing renovations on that right now. And that's where I'm going to live. So I'm pretty content right now where I am. Mortgage rates have been going up. I think they've come back down. They were up about almost close to 6%. Now they're coming back to an average of about 4.5%. And that's definitely softened up the market. What I've been noticing looking on Zillow and realtor websites is houses that are not that good are sitting on the market for a long time and having price reductions. They're coming back to where they should be. Like, it's a crappy house. It's been overpriced. Last year, a crappy house would have just had multiple offers over ask. Now we don't live in that market. But nice is still selling. People were, if you have a nice house and you're trying to sell a nice house, it still sells. So it's not this is anecdotal from what I'm seeing. We're not in this mass capitulation that everyone is waiting for and has been waiting for the last 2 years. That's my seminal point about the housing discussions is everyone's been hoping for a 2008. Like, people have forgotten that 2008 was scary, and because it was scary, that's why people weren't buying houses. There is so much pent up demand for cheap housing and a housing crash. Like you wouldn't believe everybody. How many people do you know in your regular life that want to buy a house? The fact that people want to buy houses means there's demand. Now, maybe that's just anecdotal. Maybe that means nothing. But I think talking about a housing crash gets you a lot more clicks. I mean, do I want to say it? Yeah. We may actually, I hate to do that this time, it's a different thing, but we live in a different world than 2008. We have a lot more prevalence of social media. And I guess one thing that I can, if I think about it, that I notice is, and this is where I'm going to close out on. Why is there a 10-month supply of houses right now? Good question. I really need to know what 10-month supply means, Vixine. Are they good houses? Are they new houses? One of my big pet peeves, and this goes outside the housing thing. BlackRock stopped buying, is what they said. One of the things that kind of I just wonder how, like, if you want to get clicks, if you want to get follows, there's two ways. Well, there's three ways now to do it. If I wanted to really increase my social media presence on Twitter and whatever else, probably that TradingView. TradingView is good. It's got actually good trading people on it. Talk about how the stock market's going to crash and crypto is going to moon, and now how the housing market is going to crash. Those are three ways that you get followers, clicks, and shares. And what really brought this to a head was last year, and I kept pointing it out to people, like even as the market was going down, they would still keep sharing tweets from people saying something about crypto when in October, November, they were projecting crypto going to the moon. And now they're still listening to these people because they're all focused on confirmation bias. Confirmation bias is a really big problem. And, I keep making this point to people. I have a good memory. I have actually a really, like, on some things I'm very forgetful, but when it comes to markets, I'm actually very, very, very good about remembering things, almost like a curse, because it frustrates me that other people are not as good as memory people as me. I remember through 2021, we're looking at the dollar currency index right now, which just reached a 20-year high. I remember in 2021, the narrative on social media was that the dollar was going to get inflated away. We've printed more money in the last 2 years than we have in all of existence. It makes total sense that we would see hyperinflation, but the opposite happened. And the US dollar, has been one of the best performing assets of 2022. And that makes people in autistic screams. They're like, blah, 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 but reasons. I'm like, well, no, like the stock market's down. Crypto is down. You can literally buy more stocks. You can literally buy more crypto with your US dollars. If you flip it on its head, because your US dollars are more valuable. Some people just don't want to admit that narrative was wrong, because the prevailing narrative often is. But like I said, social media creates this sort of feedback loop of confirmation bias. Anytime I post something negative on some of my Bitcoin maxi chat rooms, oh man, I don't get a tag. They're pretty nice, but man, anytime, like there was a let me see if I can pull it up here without. Yeah, there was something they posted earlier this week talking about how this was. Let's see. Yeah, somebody posted. They forwarded this thing where, record low in the circulating Bitcoin supply. I mean, that tells fundamental people, oh, there's the supply is limited. Bitcoin bear markets end when only strong hands remain, and hands have never been this strong. Supply is tight, and this kind of stuff gets shared because it makes a lot of sense. It makes a lot of sense, and it also tells people what they want to hear, that their bags are going to go back up. But as I pointed out to people, a lot of funds got really creamed. Can I bring this up here? Okay, I can't read that. So Grayscale, there were a lot of funds that were based around this Grayscale Bitcoin Trust, GBTC, being at a record discount. In other words, they were playing this arbitrage. And, at first it was a record of 26% down. Then it was down to a record of 31%. And now it's down to a record of 32%. And so these records can continue for a very long time, but people take this as their sign. And to be fair, what else are you going to go on? But I'm starting to notice that now in the current year, social media and confirmation bias are a really big thing. And it's not always correct. It's not. And so I automatically have started assuming, maybe one day it'll be to my detriment, that if everyone is talking about something, it's probably actually not going to happen, because they're basically talking the current fears, and the current fears are what's reflected in the current price. So that's just a little bit of philosophy there. All right, Vixteen answered my question about what is a 10-month supply of houses. It means it will take 10 months to get rid of all the supply on the current market. Oh, I see. Okay, at the buying rates. Okay. This is not a normal market, assuming no new sellers or buyers. House prices take time to crash, just like they did from 2008 to 2012, 2012. Okay. We shall see. Maybe I'm biased. Because I have a rental and a place I just bought, and I'll be very, very sad if. No, I'm not. I like my place. My place is pretty awesome, actually, and I got a good deal on it. Off-market handshake deal. Yeah, I'm not going to be sad about that. But, yeah, best of luck out there to everybody. Have a good weekend. Have a good long holiday vacation. If you're going somewhere, be safe. And we'll see you next week. Regular time Friday. Bye-bye.